Good morning. Good morning. It is 11:30 on December 30th, the day before the last day of the year. We're going to be diving into some charts today. What's going on? What's coming up? Is this chop just trying to completely jack up what we're feeling, what we're doing before it goes higher? Or is this doom and gloom and we should be watching for much lower targets? We're going to be diving into this here in just a couple seconds. I'm just getting these retweets out. Everybody get that live stream retweet out over on at Kelly Kellum or at BitLab Academy, because we got the goal set. If we do 10 super chats today, whether it's questions, just super chat, just whatever it is, we're going to be picking from today's retweeters. So everybody get active, get involved. We're about to go live right now. I'm just getting this last thing posted here on the comment section of the live stream over on Twitter, so everybody can see the links for Arculus and for NordVPN and for, of course, BitLab Academy, that deal. We're still under $100,000. So with that being said, everybody, if you're ready to go, drop a 1 in chat. If you are bullish, drop bullish in chat. If you think January is going to be bearish, tell us, let us know. Say bearish for January. We're about to dive in. I think it's time to get into it. Let's go. Let's do it. Let's do this together. Let's start.
Play that type of
What's up, everybody? How you doing? Good morning, good afternoon, good night. We got to talk about what's going on with this price action right now, because it is doing its best to scare some of you out. And I think it's the wrong time to be scared out, because as scary as this may feel with the price action kind of rounding out like this, we've got some signals that have shown that this has happened somewhat on repeat in a similar fashion at similar parts in the market. So we need to pay attention to this. Should we be watching for this $85,000 region? Are we waiting for a price to come all the way back down into the mid to low 70s? Or is this all just there to trigger our emotions? We are here. We're doing it together, bringing you that meaningful content, tools, resources, and of course, the best community here in the crypto ecosystem, because all of you are so wonderful. You have gratitude for life. There's no trolls here. We are here to grow in this space together. And then diving in a little bit further, I do want to say, we're going to be getting into that. My name's Kelly Kellum. If this is your first time here, I hope, and I can almost guarantee it's not going to be your last time. Welcome to the channel. Welcome to the show. Looking at everything, diving in over the weekend. Not much really happened on price action. That's why I didn't really do any updates. All those targets were still the same. And look at this. We're still sitting above $3 trillion market cap here in the crypto market. 3.23 trillion. Bitcoin still in that, above that 1.8 trillion. Ethereum still, I feel like it's been at this 400 billion mark for quite some time. And what does this mean for the markets? Well, you know what? Everybody's so scared, and we have still never-ending stacking bullish vibes coming into the market, bullish fundamental evolutions. And we see Hong Kong legislator proposes adding Bitcoin to national reserves for financial security. Hong Kong, that gateway to China. And we also see beyond Hong Kong, we see publicly traded Janiver to accept payments in Bitcoin. Well, who the hell is Janiver? Well, Janiver's assets under management is about $10 billion. Janiver is a real estate company that offers cloud-based software for real estate syndication. So real estate, we've been talking about the real world asset tokenization for some time, but also what about the inclusion of digital assets beyond the RWA play? What about the inclusion, the integration of digital payments and the sort of capital channels that's going to create? And also the further, all these seeds are just getting planted across different segments and different parts of the ecosystem of global finance, and these large institutions and more that are accepting payments or adding to their treasury, like we're seeing across so many different new companies just stacking into Bitcoin on their treasuries. Remember, fair value accounting just changed December 15th as well. And we're coming into an era where our administration that's coming into office January 20th is a Bitcoin and crypto friendly administration. I do think this ball, I do think the bullishness, I do think where we're going is just getting started. Yet some people right now are like, is it topped? Is it going lower? Maybe we'll have a little bit more of a correction. But when we zoom out on the charts, it's all suggesting that more so than ever before, we're in the most asymmetric risk opportunity of our lives with crypto. But where are we at right now? Should we be worried? There's a lot of Bitcoin liquidity. sitting right above us, up here, right at that $100,000 mark, but directly below us. So if you consider these dark yellow areas, these very bright yellow areas, I should say, this is essentially magnetism. This is where there is liquidity interest and sort of an incentive for markets to push into these zones because there's essentially free liquidity there. And where is the closer one? There's a much closer one right here, directly below us. And it's quite hot all the way down to this $90,000 mark, which is why, by the way, for those of you that were paying attention, for those of you that have your thing right here, say subscribed, and you have that bell with its bright white bell, you have all the notifications on, you will have noticed that on the BitLab Academy page this morning, I did do a video. It's not going to be there. It'll be an unlisted now. I had it on the public page for about 15 minutes, and it was this right here. Everyone come into the end of the year, and I did that morning TA for all the members. But I did once a week. I'll pick one each week that we release to the public. For the first 15 minutes, you'll only see it if you have your notifications turned on. But I gave a breakdown of what we're looking at, and some of those expectations, some of that analysis is already playing out from even 2 hours ago when I posted this. So I really want to do, I'm trying to do as many of these as possible for the members, and sometimes give you people that are followers here that have your notifications on. You get that little Easter egg periodically. So we're seeing bullishness, Hong Kong. We see Janiver. We see MicroStrategy bought more today, and they still have $6.8 billion of basically dry powder that they can deploy at any moment. But what is Michael Saylor doing? He's doing what the smartest people in the space do, which is stop trying to catch tops and bottoms and no, he's layering it in. He's been doing it 8 weeks in a row now, and people are still worried. We have this below us. We know there's liquidity below us. So why are we so worried when the price comes down to scoop what we can see on the charts as a destination that is very likely? So, guys, remember, it is the eve of New Year's Eve. It is the eve of coming into a next year. The tax harvesting is going to basically stop after tomorrow. We have other bullishness as well, considering the fact that FTX is beginning to repay $16 billion January 3rd. That's basically, I think, towards the end of this week. $16 billion of crypto-focused people getting stable coins, which is dollar in the crypto market, getting that $16 billion starting to be repaid back to them. Payments expected within 60 days. So whether it kicks off where there's an even flow on January 3rd and consecutively after, or even if maybe it goes all the way to the last couple days and all of it's distributed, who knows how it's going to play out. But this is a huge amount of money that's coming into the market, and some of this pressure. Today, remember, today there's still FUD out there. People are still worried. I'm still seeing thumbnails and titles out there with other crypto YouTubers. Don't always believe the thumbnail. Sometimes it's to get you to click, only to tell you this is actually not the case. Whether they say massive crash and you're like, actually, or Tether FUD, it's going to be delisted on the 30th. Well, that's what people are expecting. And then you get in there and you realize, oh, wait, they have 18 to 36 months to comply. Things aren't going to just be mass delisted. They're going to take advantage of what they can, especially hoping with the new U.S. administration coming in, sort of constituting on the world stage where people should be focusing, what the guideline is for the world. You know, the U.S., a lot of nations globally sort of take their lead from what sort of regulatory policies the U.S. is making. So I'm kind of very reluctant to think that this FUD about USDT being delisted in the EU is really going to take place. No, I think that's more FUD than people want to acknowledge. So, and today's that day. So, of course, I think sometimes market makers can also take advantage of that. And if the ball starts rolling down, they also dump and you see the price move down. And what would that look like? Well, considering looking from Peter Brandt, who is a multi-decade legacy professional investor and trader, he talked about this. Look at this. Looking at this right here, he says, if you're a Bitcoiner, take a look at this post from several years ago. It describes the famous hump, slump, bump, dump, pump. What was the last word there? Pump, chart construction in Bitcoin. This is what he is. I'm not sure where it is, but this is essentially looking like it feels bearish, right? And what have we been talking about on this channel for the past 3 months, 2 months? looking at charts, in this case, this does look a bit bearish, and it gets people to start being worried, only to have the price to come down like it has, committing people short. Even if we got a bit more of a dump down to this 88,000 or 85,000, that would be like people like, oh yeah, this is playing out. Let's get out because it's going, only to come down and slingshot to go back to the upside because of the strong trend we're in addition to not just the strong trend that we are in, but also understanding that there is so much bullishness on the horizon. The skyline is burning right now, showing you that that sunrise is coming. And because of that, I think there's a lot of newer people in the market. There's scared money in the market. There's people that are just in this market from the first time, coming from stocks and getting into ETFs. ETFs have a huge now weight on what people's expectation is in the market, with the buying and the selling, the hope and the fear, so on and so forth. Having these dumps, 15% dump only over the matter of a week and a half or so in Bitcoin, that, in a traditional market, that is major. People coming into this now are not, they don't understand that. But those of us that are paying attention cannot fall victim to the emotional trading that is happening right now and realize that some of these setups are there specifically to trick us, but I will not be tricked. I will be stacking because I am very confident about what's coming. None of this is financial advice. This is strategy advice that I've seen over the decade that I've been in this market, watching how these things play out, because we feel it every time. We get super excited only to get wrecked. We get super scared only to get wrecked. Well, you're getting excited at the wrong moments and you're getting scared at the wrong moments. We can look at what is going on in the market and plan accordingly based on where we see this roadmap going. Now, continuing on, this is what we're talking about. Now, Peter Brandt's breakdown, this is very similar. Look at this, how we saw the sideways price action, the trend line, basically, boom, explosion out, reaccumulation on this midway move, and then sideways, boom, breakout. This is looking very similar to this. Could we get, or are we already in the middle of it? Could we get another, that move down? Well, we have been talking about this. We've been talking about this, and I broke it down in this morning's TA breakdown, and that this is that area that we're looking at. If we look at it on this chart right here, and I did adjust this because this is looking a bit more like a falling wedge in the middle of a sort of head and shoulders ugliness. Again, I'm watching for them to trigger people with the false breakout to come back in. Something to this effect. If it goes further, does it upset me because this is the wrong assumption of what's happening? No. If it goes further down, I still see what's on the horizon for the likely national strategic Bitcoin reserve that's going to be instituted at some point, whether it's January 20th with an executive order or the 21st or 7 months from now. It doesn't quite matter when. We also see that what MicroStrategy is doing with all their buys, they still have $6.8 billion on the sidelines that they're going to deploy at some point. They've been buying 8 weeks in a row. Maybe their smaller purchase today is indicative of them considering that this may go lower and they want to layer in. Who knows? But what I'm saying is what we're seeing in this chart, although it does have some bearish conviction, we also have a bullish sort of pattern that has emerged here. So we need to be a little bit adaptable. We need to be a little bit ready for this market to chop us in both directions, to really commit you in both ways. And we're going to continue on because we got a lot of, supporting evidence of what's happening. This is also from Crypto Jelly. We see up here, look at this, back 2022. Altcoins, look at this, rejection. We're coming right here and have found a bit of support on this. Guys, the market is feeling contentious right now because we're all super excited about what's to come. And because of that, it puts our emotion on spotlight rather than our strategy. Do not succumb to your emotion in this market. Act on principle, on strategy. Otherwise, you're just going to give your money away. And another thing we can look at is right here. This is from our boy On-Chain College. With the short-term holder cost basis, at 86.6 thousand, I would not be surprised by short-term tests of this level. It doesn't need to happen, but I won't be alarmed if we see the mid-80s, which is one of those numbers we've been talking about for some time. Don't be shocked by mid 80 Bitcoin. In fact, I think this would likely be a spring if it got into this area. Morgan Powell, how you doing, my friend? How's everybody doing? How are you all doing? Where are you all tuned in from? Big love to everybody that is here. We got about 600 people here between Twitter and YouTube. By the way, we do have a goal set. If we get 10 super chats, we are picking from one of those of you that comes over here onto the @KellyKellum page. And right here, hit that retweet, hit this like button. If we get 10 super chats, for anything, could be a question, could be a coin, could be a TA request, could be just to show some love. We will draw a random name from this one today. That's how we're doing it now on these giveaways for those when we hit those goals on the page. Now, continuing back, short-term holder cost basis. Why is that important? Well, when we come back over here, we used to talk about this quite a bit when we weren't sure about the bullish trend. Now, boom, boom, boom. Where is it at? I just did it and it just disappeared. Short-term holder cost basis. Alrighty. This is what we're looking at. This $85,000, $86,000 level is proven, as we can see on this chart right here. This is very bearish trend when we're just finding resistance at it. Very bullish trend every time we're above the short-term holder cost basis, finding support all the way up with some small deviations below. Below here, rejection, bear market. We get back above, a little bit of mini bull market, bear market, bull market, bear market, and we're still holding on to that. And this is that area just zoomed in. See, we did get a deviation. What did that prove to be? Great buying opportunity. We did get a tiny deviation. We bounced right at it. Great opportunity there. Only to, it kind of chopped us out a bit. Oh my God, it's the end of the world. Only look at these opportunities. Boom, back to the upside. This is something that I think we need to be paying attention to. And it lines up with one of those levels on the chart that we've been outlining right here. These sort of market low sort of zones. If we kind of do a double line there, we can see candle body. Look at that, 85.3 to 86.2 sort of, 86.2 sort of level. This would be an excellent opportunity zone, boom, for a potential spring to the upside. Now, that also is supported by that short-term holder cost basis. Now, considering where we're at in the cycle, what's coming, and a likely increase in global liquidity coming with the whales the data showing the whales starting to buy on Bitfinex again. Some of those OG players in the crypto market. I'm looking, if we do get opportunities here, I want you all to realize, as excited as we can be for these opportunities, we need to realize a move down on Bitcoin down into this anywhere in this region will probably represent a pretty big spill in the altcoin markets. We're already starting to see a little bit of a dump here. We could come all the way, we could be coming all the way back to this line. A move on the others chart down another 9% here would represent, anywhere from 5% to 50% drops in some of your altcoins, depending on what part of narrative in the crypto market that they're in, how big their market cap is, and just sort of what's happening in the landscape. But do note, if Bitcoin does have that spill, if Bitcoin does spill down into here, you are going to see your altcoins bleed more than you do see Bitcoin bleed. So just be aware of that. Now, Jesse Olson pointed out that the MicroStrategy chart is kind of, in some ways, front ran what we've seen in Bitcoin to the upside, but now also to the downside. So what we're seeing here, this has hit one, two, three targets, making its way towards the fourth. Are we in for that move down into that 85, 86? Are we into that move down to fill the CME gap that's below us, the futures gap? Remember, the futures market trades like the traditional asset market. It closes on Friday, opens on Sunday. The gaps that present themselves are if the price changes up or down during the weekend while that market is closed. Those gaps tend to get filled. Now, everybody's wondering, are we going to get that spill down to fill that $78,000 to $80,000 mark where the CME futures gap is? I'm of the opinion that it probably won't, although many gaps get filled, but I'm prepared if it does. I only outline this not to be bearish. I outline this so that you can be prepared regardless of what happens. If you're feeling very overexposed, then you need to ask yourself, can you sit on your hands? Are you going to, with a drop, are you going to capitulate after it's already dropped? If that's the case, when you do that, that will likely be the spring for when the price action does move its way to the upside. We need to act on principle. If you were to sell, this would be the area to sell on this breakdown here, not once the price is all the way down here. You wait for these sort of relief bounces. Oh, we found rejection. Boom. That's where you sell. And then you can buy back down here. There's a difference if you are an investor in this market versus a trader. Don't be somebody that's buying because you're excited and selling because you're scared. That's the wrong way to go about this market. And we'll talk about that, why that is here in just a moment. We talked about the short-term holder cost basis there, but then also the greatest alt season of our lives. Very likely, a lot of people think could be kicking off in Q1, Q2 of this year. History doesn't lie. 2021 alts went crazy after Bitcoin dropped 15%. Bitcoin just dumped 15% again. Same setup as 2021. And if we look at that in this chart right here, actually, I already closed that other chart. I do expect, even with this pullback we're feeling right here, which is feeling bearish, we're still in a very bullish structure. We need to be prepared for lower prices. But where we're at in this cycle, with months to go in this bullish trend, within bullish trends, you have corrections. Can you be prepared through the correction to act on strategy, not be scared because you're like, I think it's over. It's not over. I truly do believe that. Super chat from Timothy says, TIMA looks like it's ready to lift off. More exchange listings coming next week, he says. Well, congratulations on TIMA. Thank you for the super chat, my brother. We got one super chat. Cool. I just want to make sure I didn't miss any others. Now, coming back over here, I just want to reinstitute before we're going to dive into some TA here in just a moment, but I just want to reinstitute why this is so important. The median family income in the U.S. has gone from $10,000 in 1971, $10,000 for a year, to $55,000 today. That's a gain of 5.5x. However, the median cost of a car has gone from 4K to 48K. That's a 12x increase. The median cost of a house has gone from 25K to 357K, an increase of 14x. The median cost of an Ivy League education has gone from 3K to 87K. That's a 29x. The average cost of healthcare per person has gone from $400 to $15,000, an increase of 37x. Basically, the average person in the U.S. is worse off today than in 1971. So much for progress. And this is because of inflation, but also the rising costs of goods and services and life that is much greater than, even though we're getting paid more, you're actually making less in the dollar buying value of what you have. The only way to keep up with the system, or potentially, or much more likely to get ahead, is if you trade your dollars for assets. And in this case, we're obviously very crypto focused on this channel, but there's other things, NVIDIA, Apple, Coca-Cola, different defense things, stocks, annuities, IRAs, but investing your assets in things that are capturing that dollar printing. And of course, what we've seen is Bitcoin and a lot of these altcoins potential really does provide a huge window of hope for those that want to really adjust and expand their future. If you're holding dollars and just trading your time for dollars, spending your dollars, you wonder why everything is just getting worse and worse. Well, also because we have debt now. We can live on credit. So, okay, you have these things, but now you're a slave to the material things that you own because you need to pay off that debt. Investing and taking advantage of capturing the monetary printing that is causing the inflation is the only way to truly get ahead. And that's why I said this: when you're frustrated and maybe a little scared in the market, remember, zoom out. Others are feeling that too. Most lose money because emotion triggers their response, and that steals your capital, steals your value, because you're giving it away at the wrong time, and you're giving, and you're just taking it, the market's taking advantage of you when you're acting emotionally. So zooming out, having a strategy, and buying the fear will change your future profits, so long as you're able to hold. So stack and make sure you have a strategy. Now, when we look back to what we're looking at right now, let's go ahead and refresh this. This is on the 1 week chart on where the liquidity is. Okay, we kind of cleared down, and this is getting very empty here, which also means not a lot of people are longing. These hot zones mean people longed. They were longing at some points in here, and their liquidation zones is what these brighter colors are. Cleared that. Okay, it's flushing out all the exuberance because the future is so bright. People are getting a little too exuberant with what they're doing with leverage. Now, when we zoom into where we're at, for instance, on a very small time frame, we did kind of clear out this zone. Look at how hot this is back up here at 93.75. I would be a little cautious on a move up to this zone, a potential sort of trap before it continues to the downside. We'd have to see how price interacts once it gets up into here, if it pushes up, because we still have this node below us down here, basically in the 90s, We're kind of tracking right now in that 90, 91, 92 sort of zone. But let's go ahead and make this. I want to keep this on the chart just so we can hold ourselves accountable. Let's go ahead and make this much less visible just so we can see it. Boom. We see this. We're holding on currently. Look at this. Wick to the downside of this lower level of support. Massive wick. Bulls ate it back up. The bears tried. Bulls ate it back up. The bears tried. Bulls ate it back up. Look at this. Very quick V shape. Boom. Bounce. We're kind of sitting on the edge of this, also coming into a bit of an apex where we're having this large width, much tighter. Are we going to get much tighter here? And what happens here is going to be very telling throughout the end of this week. Today is the day before the last day of the year. There's still people shuffling around their budgeting and their investments and their tax harvesting, and people are on holiday. I talked about the choppiness that was going to come into this market the last couple weeks as we come into this holiday season. We've gotten that. Look at this. Chop back up. Dude, watch out over the next couple days. I would say through this week, I would say into next week, we'll start to get more clarity about the true intention about what's happening. I can't pronounce that, but you hear it. $10 super chat says, have been into TEMA for a month now. And it's, I think this right now is the prime buying op, even if, bum crypto market. Yeah. Well, thank you very much for the super chat. I see a lot of people are posting about TEMA now. I'm not at all familiar with TEMA, so I can't go too deep into it, but, we also got a super chat from Falco. Big love to Falco. 1, 2, 3. We got four super chats. 6 more. We got that giveaway we will do today from those that retweet the space, and that is this live stream right over here on Twitter, on the X. Hit that retweet, hit that like button. If we get a few more, we will get into it. Crypto Crank, what's up, my friend? Big love to you. So guys, I think people are so worried with what's happening right now, and I'm like, guys, you see the fundamental changes that have happened since January 10th of this last year. When the Bitcoin spot ETFs went live, that was kind of step one. Step two was Q1 of last year, when over almost 1,000 different institutions bought huge allocations of the Bitcoin spot ETF. And then we saw over the next 7 or 8 months that the two Bitcoin spot ETFs basically broke a pace that gold ETFs took 20 years to do. We did in like 8 or 9 months. The appetite for Bitcoin is only increasing. The fixed supply of Bitcoin is staying the same. The money printing is still going to be coming down the road, regardless of what happens right here. Why are we so worried? Only because we're expecting and we're needing the price to do something because we're over allocated. But Kelly, the market's supposed to be going up right now. Well, if you freaking zoom out on the chart, this has been having an incredible year since back here in January 23. We see this. Yes, it did some work here and then launched. Did some work here, flushed people out, then launched. Really chopped people out here and then launched. And we're worried about this right here. This is the same as if I went on a 1-hour chart anywhere where there's a bull trend. Look at this. Same thing. Oh my God, it's up. Oh, chop. Okay, it's up. Correction. It's up. Correction, a little sideways action. Big move, but then what happens? Sideways. It happens on every time frame. We're just on the larger time frames, you're going to have larger moves. And when you look at this is only about a 15% move to where it's come to right now. Now, we've seen in previous cycles, and we've talked about this before, but we've seen in previous cycles that there was, 11 moves that were, look at this, from down here, $210 all the way up here to basically $20,000. Big move. Let's just reconstitute ourselves. Look at that, 40% move. Look, another move up. Oh my God. 25% move to the downside. Look at that. 40% move. Look at that. 35% move. Another one. 27% move. Over. Rinse and repeat. When we are at this part in the market cycle, what part am I talking about? This part of the market cycle, post-halving. Look, this is when this was relatively shorter, but this went sideways and then formed a new high. There was a lot of different consequences within this that kind of helped shape the market, with the Chinese mining ban, where they had a substantial amount of miners there that then had to, basically a lot of them sold off. And then when they reconstituted, we still had this next move up. So unless we get some major shift in global policy or the U.S. outright bans, I don't think we're going to see something like this. I think we're going to see something more like this and like this, a combination of these two, a big run up into March, maybe April, whether it goes sideways from there like we saw last summer. Look at this, March all the way through August. Sideways price action, then the launch. Maybe we see something like that again, a big move up into 150 or something, sideways action, or even a sell-off like we saw in 2013, then that continuation for that next major leg up for the true market cycle top. But we don't know. Anybody that tells you they know, run away from their channel. All we can look is how things have repeated historically and coming back over and realizing that a lot of this is shaped by global liquidity. Where's my global liquidity index? We haven't looked at this in a while. Look, global liquidity has been pulling back and Bitcoin has been holding relatively strong. But it also could indicate that this pullback is front running what is likely to come in the near future for Bitcoin. Maybe we get that bigger pullback. All in all, I don't think we're going to really get that next leg up until we see this bottom out, which it kind of looks like a trend line here. If this is able to bottom out here and we start getting that quantitative easing or the lack of quantitative tightening, then I do think that could be further fuel for what we're seeing in the market. But when we come over here and look at the Bitcoin and S&P 500, let's go over here, analytics, boom. This is looking a little weak here. We have to understand the S&P 500, looking at it as comparison to Bitcoin, gives us a good indication of what the risk narrative is with investors. And realize, because we have a lot of new market participants in this market in Bitcoin, especially because of Bitcoin's spot ETFs, this also has brought in a lot of traditional asset-minded investors. If risk is starting to look a little weak here, if this does start to break down, it could indicate that, that risk is going to come out of the market for a month or two. We need to be careful where we're at right now. It doesn't mean to sell everything. It just means, as bullish as we are, there are signs and signals in the market that in the near term, we could be experiencing some of that washout mentality before we get that resolution to the upside. When we look at Ethereum, I just want to point out there is a bit of a bear pennant here if you want to look at it like that. And that target would, be all the way down here to $2,600. Do I think that's going to play out? No. But I do think if this does spill down, which it already has, look, if this does spill down, we could be watching for essentially this sort of zone right in here, which is about 3,200. And if we lose, let's go out to the 4 hour. And if we lose that, then coming back here to the 382, right at 3,000, the next leg down from there is in that 2,800 mark, which would be a little bit short of this deal. But what did we talk about? There are fake outs galore in the market right now, trying to get people committed short before it actually resolves to the upside. So be careful. I'm looking for opportunities if they arise, because we're seeing it across the board. Avalanche. Also, look at this. A breakdown of the zone now comes right into it, rejects, comes down. Are we going to see a $30 avalanche? Very possible. But the pit stop there would be about $33. And if we lose that, I do think we're coming here potentially even lower, down into this $28 region. But it's the last 2 days of the year. The most bearish setups on these small time frames are doing everything they can to make us get worried. So worried. And we're going to be laughing at this in 4 months. I do believe we're going to be like, you guys see what happened? Because when it's just funny to me how triggered we all get. Algorand, fake you out down, fake you out back up, comes right back into the zone. Algorand still, and this is now sitting basically under this resistance zone right in here. This does look to me like we're coming down to about that 28 cent mark. If we lose that, I think we're coming a bit lower, down into the 24 cent mark. If we're able to hold this, and this is just a bit of a weakening, and again, I think we need to be a little hands off the next day or two. If this is, because this does look weak, right? This is rounding like this. If this comes down and loses its 28 cent mark, I'm looking for this zone and then potentially back down to 19. But I'm a little hands off until the end of the week, maybe the beginning of next week, until the end of the year jitters clear. The tax harvesting sort of clears out. The FTX distributions potentially start at the end of this week. We come into a fresh year. Notice that the USDT didn't get delisted everywhere. Just allowing the market to shake out those weak players. And if you're feeling weak, Get away from the charts. No need to even tune into me the next couple of days. Don't put yourself in a position where you look at it and go, oh my God. You need to make sure you're doing what's right for you, for your portfolio, for your risk management, for your time horizon. Let's be smart, but because we're still seeing, opportunities in the chart. Moonwell, I'm very bullish on this for this coming, for 2025. It's in that DeFi ecosystem on Base. Coinbase is having wrapped Bitcoin. It's going to be processed through things like Aerodrome, and Coinbase is going to be, Moonwell is going to be able to be utilizing some of that aspect. There's a lot of more institutional players that are going to be using that. You see the World Liberty Finance kind of diving in there. We're seeing how quick Base as an ecosystem grew with how much transactions and how much use case it has. It's truly incredible, but this is looking, oh my God, so bearish at the moment. Great. If I'm very bullish on this for 2025, but in the near term on the 4-hour chart, this is looking like it might give us an opportunity back here at, 5.4 cents. Maybe if it drops, down in this 4.5 to 4.49 region, I'd be very bullish on this as an opportunity. I don't know what you would do, but I would be, because I believe that there's I do believe that alt season is when it gets going. I can't even tell you how bullish I am. AAVE is another one of those. And AAVE, look at this nice pattern of this channel. Let's go to the 8-hour. This nice channel that this was in. And then it kind of, rejecting, I don't want to say bearish, but still on the bearish side as it's rejecting on this mid channel. And then support comes up, launches. Well, this very well still, as bullish as this is, zooming out, this does look like it might give us an opportunity if it loses 315 back down here in the 301 to 280 sort of region, right in this zone, potentially coming back even as low as, down to this $200 range here. But I'm very bullish on this because this has a little bit of a legacy aspect within the DeFi ecosystem, because it's been around, and the amount of money that's transacted in this is incredible. And the TVL and the use case, institutional grade sort of DeFi that's being utilized on AAVE. But if this does give us an opportunity, I'm going to be ready to take advantage of it. This would be another sort of stopping point right here. I'd be watching this zone. If that's lost, I'm watching, back into this 200 to 210 sort of range. If this is able to hold up, maybe the market's chopped the next couple of days, not just AAVE. I'm talking about all of them. Maybe it chops the next couple of days through the week with little fake outs here and there, and we just resolved to the upside. Great. We've been talking about the upside for the last 2 months. We've got to be aware of downside potential so we don't get wrecked by our bias in this market. 377 people in the room over here on YouTube. Another 300 or 400 in the room on Twitter. Big love to everybody. By the way, again, if we get 10 super chats today with questions, TA, specific coins you want to look at, or whatever, we will be doing a giveaway today from those. We'll be drawing from those of you that come over here, hit that retweet, hit that like button. We're going to be wrapping here a couple minutes, the last couple opportunities to take advantage of that. But Solana, also, everybody's so bullish. Why is it pulling back? Well, okay, pulling back where? Right to the previous range of resistance. Now, currently flipping this to support. If this comes down and loses this level, which is also the golden pocket right here, 0.618, 0.65. If this loses this, then I'm watching for Solana to come back into the 120 sort of region. Does that piss you off? It shouldn't, because if you're bullish on this on the way up and this comes back and retests this zone, it gives you a 54% cheaper Solana than it was up here to stack in. That's how we look at this when we've been in the markets for some time. Now, if this is able to hold this zone, like I said, with some of these coins, if this just kind of chops, then boom, we're watching for a resistance here at 204, which is kind of in line with where this descending level of resistance is. And then potential continuation up. But everything's waiting on that risk narrative for what's going on with Bitcoin and the market. Same thing with, look at this, just like we saw in Solana, descending level of resistance. Found support here, boom. We came back. We tested it. Now we're trying, it's trying its best. But look at all this bearishness on the BitLab trading stack. Speaking of which, everybody, I do want to shout out our channel partners, our family. We have the free traders group over there on CoinW. If you want to get involved there, that link is directly below the video. If you come over here onto BitLab Academy, the live, whatever, you're watching directly below. And that is right here. If you scroll down right here, click more, free traders group. That is the link. By the way, when you deposit, sign up for CoinW and deposit, all the information's in there when you click on that. Deposit $100. I think you also get $100 back. That's all your money, free money to trade with. But right in there, if you want to get involved, we are still under $100,000, everybody. So we still have that deal over on BitLab Academy. Go to lab.bitlabacademy.com/deal. That page looks like this. lab.bitlabacademy.com/deal. That page will look like this. You get 15 days free. And while we're under $100,000, this will still be available. And you get about 35% off for the life of your account. Even when this deal link goes away, you'll be locked into that lower price. If you want to get access to the indicators we use, and also the 120 different lessons, everything from on-chain, candles patterns, indicators, RSIs, stochastics, our BitLab trading stack indicators, tokenomics, all that and more. When you sign up here for the Discord, the next page is that upsell. If you want to take advantage of that, also very heavily discounted. That's also how we keep the lights on here, everybody, because we do have a huge team of people and I do appreciate it. And of course, you can always sign up for the BitLab YouTube membership and you get access to those BitLab morning TA sessions and other member stream sessions that we do. We get it right in here like we did here. You know, you get access to that and it's about $1.25 a week. That link should be directly on the page right here. It should say join. If it doesn't say join on yours, all you have to do is come down here into the description area. It says right here, join to become a BitLab YouTube community member for perks. That link is right here. Get advantage of it. I'll share it in the live chat right now. And you guys help us do more things, share more things. And obviously we spend all this time here with you. I love giving back to you guys, but we're also want to make sure that our families are fed, outside of just trading, because I'm not trading all the time, doing content all the time. I do trade regularly. But guys, the altcoins, this is still a potential bearish setup with a big spill to the downside. I'm looking to it for if we do get that price action lower, that is opportunity zone for us to stack in before this market runs away. I love you guys. Again, thank you to the super chats, Timothy, Falco, Takowski. Big love to you. I really do appreciate each and every one of you. We're going to head over to the blockchain basement. We're going to head over to the blockchain basement now. Love you guys. I appreciate you. Again, happy end of the year. Find gratitude. Be love. That's all I got. Adios, everybody. Bye-bye.